And in August, Kenya's top 9 banks, ranked by asset size, unveiled their financial results for the first half of 2023 against the backdrop of soaring inflation rates and a depreciating currency. For details now, joining me is Eric Mukaya, founder Mwango Capital, joining me right there in Kenya. Great to have you on the show.
Good to have me. Thank you so much for having me.
Fantastic. So how has the inflationary environment in Kenya impacted the H1 result of the top banks right there in Kenya?
So because inflation has been a bit sticky, above the central bank rate of around the target of around 7.5%. Because of that, the interest rates have also been high. So that means that banks are benefiting a bit from taking a bit of higher interest income. But at the same time, they're having to pay a bit of higher deposits. The good thing is that interest rates, at least the interest income, has kept above the interest expense. So banks are still reporting good profits. I think the major challenge, though, for banks in the first half of the year is mostly non-performing loans. It seems like there's a lot of worry in the market around the non-performing loans, especially of the big banks. All the banks that are listed, except 2, raised their provisions for the first half of the year. So that means some of them are a little worried on how people are coming out of COVID. The biggest worry is around the KCB, which is a third of the non-performing loans in the industry. So I think quite significant there. So I think because of that kind of worry, you find that KCB share price is down almost by half in the past 1 year alone. So lots of things to pick around the report, but I think the major takeaway is that banks seem to be generally performing well, even though there is a bit of worry around their asset quality, and that means they are non-performing loans, which is translating a bit to depressed share prices at the Nairobi Securities Exchange.
Right, the banks seem to be doing pretty well, at this time. But how is the top line growth among the top banks?
I think top line growth is good across the banks, especially let's say the big banks. Equity, they're still growing. Equity and KCB themselves, they just completed getting in the acquisition of TMB into their fold. So I think pretty well, much good performance across board. I think the challenge is a bit on the profit side. As I said, provisions are ticking up a bit, and some of the expenses across the banks are also increasing slightly. So generally, though, banks are doing well, especially those ones which are not headquartered in Kenya. Say Stanbic, the profits are up around 48%. So generally doing well, I would say. So maybe something else that you would pick up from the earnings is especially that banks have been reaping the benefits of the issues around exchange rates. I know in Nigeria you've been having issue of the exchange rates. In Kenya, the issue is basically that people cannot access dollars. And because of that, the demand for dollars is way higher than the supply. And banks have been benefiting by having wide spreads across that. So you could tell from across most of the banks, they were reaping the benefits of those kind of good spreads around that. So the unfunded income was significantly up for across banks, and that's boosting them, but that may come under pressure in the second half of the year, maybe as the shillings a bit, the depreciation of the shilling stabilizes a bit in the second half of the year, as we expect it to.
Right, Eric. Everyone's looking for the dollar at this point. But what other factors contributed to Kenyan banks' profitability in the first half?
I think the first half is mostly, as I said, driven by really nice spreads on non-funded income, especially the FX income. The good profitability is also expansion to regional markets, as KCB and Equity Bank continue their battle on which is the very biggest bank in Kenya. So they're way above the 1 trillion Kenya shilling mark in terms of asset size. So just flexing their muscles as they go to East Africa. Some of them expand to West Africa and all. So I think some of them have also been able to keep their cost expenses lower, even as the economy remains a bit challenged. So they're positioning themselves for the second half of the year. So I think generally in the economy, people are worried about the Eurobond in Kenya that is maturing next year. So I think because of that, and what and uncertainty on what the government would take in terms of approach in dealing with that, most banks are playing a bit defensive in the second half of the year, with worries around non-performing loans. So the second half of the year may be a bit challenging for some of these banks. But as I said, the first half of the year mostly benefiting from really nice spreads on FX income for most banks.
And what are you expecting for the Kenyan shilling? We know most currencies in Africa are pressured at this time. What are you expecting for the second half of 2023?
To be honest, it's not a very good outlook currently. The shilling is around 144 on the official rate, something like that. Should be around 150 by the end of the year, I would suppose. The rate of depreciation is decreasing as kind of the shilling finds its proper rate now. So I think the most people are benefiting is anyone who's lending in dollars, and anyone who's also lending in who doesn't have dollar-based loans on their balance sheet, so to speak. So I think that's a challenge for a lot of people. The thing that you're seeing in the market is there's a bit of ease around the issue of access to dollars. People are not complaining as much as last year. So it seems like people are getting a bit more of their hands on those dollars. So I think for the second half of the year, I would say there's a bit of pressure with the government also having to raise a few dollars to pay one of the government policies that they have in place. So that may put a bit of pressure on the Kenyan shillings. But I would expect it to stabilize just above 150 by the end of this year.
All right, we'll keep watching and see how the Kenyan shilling there performs in the second half. Thank you so much. That was Eric Makaya, founder Wango Capital. Thank you.